Hello, everybody. My name is Steve Frody with City to Shore Real Estate. We are a new segment of the 3-on-3, and we have some three amazing lenders here. We're going to be talking about government-backed loans and some pros and cons and all the details in this crazy market, but I think it's going to be exciting to learn. And the Professional and Education Task Force team came up with some questions, and we're going to dive into those questions and learn. And in this market, we're going to learn a lot of today, so I'm excited for it. So let's start with Julie. Go ahead, Julie. Go ahead and share a little bit about yourself, and we'll go from there.
Okay. I'm Julie Bacon. I'm with Van Dyke Mortgage. I've been in the industry for 27 years and 3 at Van Dyke. I think 3 next month, actually.
Awesome. I'm Adam Talley.
Well, I don't know. I just got back from Vegas.
Ooh, that sounds fun.
If I fall off my chair, sorry.
How many years in the business now, you said?
27.
27, okay. Mm-hmm.
Awesome.
Go ahead.
27. All right. I'm Adam Talley. I'm with Mortgage One. I've been with Mortgage One for 2 years now. I was with a local bank here. Well, not local, big bank here for about 8 years before that. So lending and banking and some of everything. So excited to be here.
My name is Brad Stinson. I'm with Benchmark Mortgage. I've been there for about 4 years. I've been a loan officer for 5 years. I specialize in VA.
Awesome. So we're going to be talking about VA loans, FHA loans, and Misha loans in this market, why we should look at those loans and some of the misconceptions. So first question for you guys, what is the biggest misconception about government-backed loans? What's your think? And here you're in the lending side. I'm on the real estate side. So share with you maybe just whatever. Yeah.
I'll start. I think the biggest misconception is that it's automatically a poor credit buyer. That's, yeah.
Is it going to close?
Yep.
That's the question.
Yeah. Anybody else? Yeah.
I think too, like when you go back to that, like a lot of agents don't realize like how qualified some of these buyers are that we see. They're more qualified than some of the conventional buyers that I have. So it's interesting to me to hear that, and I think we all hear that on a daily basis. And like, can they go conventional? No, this is the best option for them, but it's a better option for the client. Sometimes it is the best option for the client.
Yes.
So, and our job is to do what's best, just like an agent's job is what's best fiduciary responsibility to the client. So,
I find, just backing up what you said, I find it difficult when agents do ask for that because we really are doing the best deal for our client, even if they might qualify conventional.
Yep.
Yeah. Most clients that I deal with do qualify conventional. They just earn the VA home loan benefit.
Yep.
So why not go with the best financing program for them? But I think what we're all not mentioning is the appraisal.
Yeah.
Mm-hmm.
Everybody fears the appraisal process.
Yep.
So let's go.
I think the misconception for me on the agent side, it's always like, like you said, a couple of them were, is it going to happen? Is it going to take longer? Is it really going to close? Is there repairs? What is the appraiser going to require? I mean, these are just some of the misconceptions. We don't, we're just trying to figure out from the agent side. So,
yeah.
Go ahead. Anything else?
I think, from a Misha perspective, and I think that's what I was asked to talk about, so I'm just going to talk. But from a Misha perspective, when I hear the misconceptions, a lot of people don't know the difference of Misha versus other loan programs. So Misha is an add-on program, and that's something that a lot of people don't realize. They think it's its own independent program that uses its own appraisal and inspection guidelines, and a lot of people don't know that. So from a Misha perspective, if you get a conventional Misha buyer, it's the same as a conventional buyer. If you get a FHA Misha buyer, it's the same as an FHA buyer. It's going to follow the same underwriting and appraisal standards as the loan that it's tacked on to. So that's one of the big things that I hear is like, Misha's got their own inspection that they do. That's not true. The only big caveats with Misha is it can't be over 2 acres and it has to be under the purchase price limit. And even the 2 acre thing, there's some flexibility. We can ask for Misha to, do us a favor and help out sometimes. It's not going to be like crazy like 5 acres, but, if it's a little over 2, we might be able to make that work. So there are some situations where that makes sense. But
so as we're diving into that, so you're talking about Misha, like from a standard purchase agreement, if I get a Misha loan on my listing, I think there's a lot of misconception as an agent. We're like, oh man, this is not, but you're saying it's really conventional, but added on What creates the misconception of Misha? Why do you think that?
Lenders that don't know how to do Misha. That is the biggest thing. So Misha is probably, outside of VA, probably NRD, but probably one of the toughest loans for our underwriters to do. There's a lot more work to it when they're actually underwriting what Misha wants to see. There's some different documentation that we need, but from a lender perspective, if we know what we're supposed to ask for, it's seamless. So our office closed these all on average in under 26 days last year, which, I mean...
Under a month, you said?
Huh?
Under a month?
Yeah, under a month.
Just want to clarify that for the audience.
Yeah, under a month. So in under a month, we are an average of 26 days. You're going to have your one-offs, that are going to take a little bit longer because a client's not getting us docs or, something happens, but
sometimes in summer, Misha goes a little bit longer.
Yeah, and I mean, like last year, they were at about a week to 10 days for underwriting. But again, that's where me as a lender, communicate that one. But two, there's a lot of times that we can get ahead of that and we can do other stuff quicker. So I can have my file underwritten prior to getting my appraisal done. That's going to save me time. So if my appraisal comes back in, 10 days or 2 weeks, whatever it is, when we were super busy last year, some people were taking 2 weeks for an appraisal. If I have my file ready to go to final underwriting when I get that appraisal back, I can ship it off to Misha, and I still have 14 days at that point to get the file back and cleared to close. So I'm still closing those in under 30 days. So even when Misha was at 10 days last year, we were still closing them in under 30 days. And again, that's the approach from all of our team. And any good lenders that do Misha will have that same approach. Your underwriters know what to look for. You're asking all that documentation up front, and you're doing a little extra legwork up front to make sure that doesn't happen.
I just find it ironic, though. It's so true of the three different types of loans. They all got some little negative connotation to it. It's like, why is that? And it's like this long-term. I don't know. I've been doing this a long time, but boy, I see great things in all these loans. But yeah, boy, it sure is difficult. So what about Brad? In a VA? What's some misconceptions with VA, maybe?
From what I've gathered so far, it's listing agents that have never received a VA offer, but they've been told by their training broker that accepted one in 1992, and they refuse to accept them anymore. It's like, okay, part of growing up in life is making mistakes and learning from those mistakes. The VA has done a phenomenal job correcting those mistakes and righting the ship. However, we're still holding them accountable for the things that happened in 1990s. Well, let's hold me accountable for the things that I did in 1990, right? Like,
oh God.
Oh geez, just not how we do business.
How about Julie? What about with FHA? What's some misconceptions with FHA? Just kind of.
I mean, we kind of covered it all, but I think the appraisal is a big one, and we kind of brought that up. I mean, the last few I've had haven't needed any repairs because the agents have been good about going, oh, we're going to need a $50 railing here. Sure. And I mean, that's how much repairs typically are, is less than $200.
Right. Okay, let's go back right there. I remember years ago, it was like, oh man, FHA, there's a laundry list of things of maybe 20 items, like from a simple plug cover to everything. But that's changed a lot. Really, with all the government-backed loans, it's changed a lot. But there's still an inspection. Maybe explain, like with an FHA, the appraiser, or all the government loans, there's really like an inspection with the appraisal. So
yeah, the appraiser goes through and has to go through their checklist, but it really is, I mean, is the house safe and sound? Right. Do you have broken windows? Do you have chipping and peeling paint?
The exterior of the house.
Yeah.
And this is where you really lean on the buyer's agent, right? When they're walking through the property, if we can save in another trip by the appraiser out to the property, I mean, we just maintain
by saving your client $150 as well.
So
not only is that saving everybody time, it's saving your client money too, because the appraiser charges for every trip that they go out. They don't care if it takes them 10 times. That's $1,500 that they're making right there, right? So I think with appraisals too, the one thing that even on conventional loans, there are repair requirements. So really my model when I'm coaching agents on the lending side is think of getting a certificate of occupancy. If you can't pass a certificate of occupancy test for the county or township that you're in, you're probably not going to pass an FHA or VA appraisal. And most of the time, you probably won't pass a conventional appraisal. You know, if something's falling apart so bad, we still have to guarantee those loans. So even on conventional, there's problems. But you know, when you think of
Orange carpet and purple walls don't
yeah,
matter.
we don't care about
Yeah,
that.
like
Well,
that
you know,
doesn't, yeah. Yep.
Peeling and chipping paint, GFCI outlets within 6 feet of a water source. That's stuff that's current code. Exposed electrical wiring. Is it something that's going to burn the house down? It probably needs to be fixed.
Let's clarify. So on inspections, it's usually basic stuff, right? It's not major. Or do you find, is that pretty true? I mean, would you say that to a listing agent, like, hey, most items are what? I mean, what's
Less than $500 in repairs.
Mm-hmm.
So unless like the furnace isn't kicking on, but I mean that's a whole nother story. But that's a health and safety issue. So that goes back to what I just said.
I think that's some misconceptions on the agent side. We have a lot of this. Oh, it's going to cost you thousands of dollars. Where they're going to need a new roof. It's going to need this. So now let's go switch back and here you are, three agents or three lenders. I'm talking about. You have buyers. Your buyers want a house. Sorry about this. As a buyer's agent, what advantage do you feel should be highlighted in submitting an offer? You know, here you are. You're up against 5 offers. Let's do it with Brad. Here you are, a VA buyer.
The truth is in the data, all right? Straight from the VA and Ellie Mae Origination Insight Report. I think I got that right. Ellie Mae Insight Origination Report. Conventional and VA. If you stack the two together, the closing percentage from VA to a conventional are the exact same. 80.3% versus 80.1% with VA. So that right there is a telling stat. But with the VA appraisal versus conventional appraisal, from the VA head of evaluation department, conventional appraisals are returning low at a 20% rate. VA is coming in 15% rate, right? So conventional appraisals are actually coming in lower. The difference between the two is the VA has 2 ways to get your value back, one being Tidewater, the other is a reconsideration of value, or ROV. This is done straight through the VA, all right? But they're showing a 79% approval rate of the ROV level, which equates to a $28,000 bump in value. So there's ways to get your value back if the value's not there.
I guess kind of reiterating the question too, it's like you have a buyer. I'm going to pretend I'm the listing agent. How are you as you guys are all sharing, how is he going to convince me to show the value in raising your offer to the top of the list? Because a lot of times I do know agents will just say, hey, oh, there's an offer of VA. They might just take it off to the side. They won't even. It's like they're actually talking about it. Like, wait a minute here.
One of my favorite questions to ask agents that do that is, are you really doing what's in the benefit of your seller there? Are you? Because that could be the best offer on the table. And you just threw that away. You could be throwing away $15,000. You don't know what that offer is if you're not really looking at it because it says VA or RD or FHA or Misha.
As the buyer's agent, just ask why. Right?
Right.
I mean,
I think that's the hard.
Right?
That's that listing side. That depends on what the listing agent's feeling and what they're doing in their past. It's There's a lot of people drawing a line in the sand, and I'm concerned for it. And that's why we're having the discussion, because they shouldn't be drawing the line in the sand. It's meant so much better.
I talk to a lot of the listing agents, like my buyer's agents will ask me to,
Right.
on the strength of the file.
That's
and
the same thing that I do. And there are some lenders that refuse to do that. It's a little bit more work for us. But I'll be honest, like every single government loan, actually, honestly, every offer that I have right now, I'm calling on just because, one, we're trying to get offers accepted. So that little push helps. But especially with government loans, I'm talking about, hey, I reviewed the listing photos. If we can get these 3 things fixed before the appraiser goes out, we're probably not going to have any issues. So those are things that I do. But with a buyer's agent, that's stuff that if you know what to look for, you can go out in your showings. If you get that offer accepted, tell me, hey, I think there's peeling paint here, or this looks kind of funky. Ask us. Ask us questions. Use us as a resource, because we can say, okay, I would like for that to be fixed before the appraisal goes out. Then we don't have any repairs because it's already fixed. So that's one of the things when it comes to, like trying to get the offer accepted and, talking to the listing agent and go over the strength of the buyer. Like I said earlier, there's a lot of buyers that are stronger on a government loan than a conventional buyer with the same down payment.
I mean, I have stats here that 13% of FHA loans in 2020 were above 720 scores. I mean, that's
So what do you think they'll, from the purchase agreement, you know, when you write in a VA loan, it could be 0%, could be 10%, whatever. Is that a huge misconception, do you think, too? I mean, because we're writing a smaller amount down. Here's what's crazy in the last year or two. Now people are writing a lot less down on conventional loans to do an appraisal guarantee. So it's kind of like the low down payment is not as high of importance as it used to be. It used to be, hey, there's 20% conventional. I'll take that before I even look at a FHA or VA or any thoughts on that? Just the low down payment? Yeah.
All right, so there's been a lot of confusion with the VA amendatory clause and the appraisal gap guarantee, right? Because we all know that addendums trump the sales contract. So if we have the sales contract that says $20,000 appraisal gap, then we have the amendatory that comes out after the fact that cancels it out. So how do we handle this, right? Well, I've spoke to the VA about this at length, and the way that they're handling it is they are holding the veteran accountable to the offer, right? It was the intent at the time the offer was placed that the veteran was going to pay the $20,000 difference, right? So they're holding them accountable to that, even though we send it after the fact. So clears that one up right there.
Anything else on just a low amount, just compared to, I think about the past versus present. I mean, today, a lot of offers conventional are coming in 3%, 5%, and using that appraisal guarantee.
I think it's a misconception that agents believe that a higher down payment means a stronger borrower. Where, I mean, I'm closing a VA tomorrow that they've got $100 grand.
Yeah.
But
But
why?
Why in the world are we going to make them put that
Yeah.
down, right, when they don't have to?
That's a big I think that's a big.
Well, yeah, and the other part of it too is, especially like Misha, for example, what a lot of people don't know is retirement funds. So retirement funds aren't, if they're not liquid, we don't have to count them. But a lot of times, like I'll have clients with a $40,000 or $50,000, 401k that they could take a loan from if needed for their down payment. That really we could shift from not being in Misha to a different product, but I don't want to use all of the client's liquid cash, so it might not be the best option. So if I'm using like down payment assistance on Misha, for example, it's because I'm not trying to use the client's liquid cash. They have funds extra. It's just, it is not in their best financial interest to use that. And so again, that comes to back our responsibility and buyer's agent's responsibility, fiduciary to the client. We have to do what's right financially for the client. And you know, yeah, we want to do conventional loans too because it's the least amount of paperwork. They're probably the easiest files for us to do. They're all pretty easy, but if it's the best option for the client, it's the best option for the client. So.
I think when we're doing them all the time, though, they're not difficult.
No,
we know the I's that need to be dotted and T's that need to be crossed, so it's just normal.
There's always things that happen with
Yeah.
every transaction.
Every loan.
Like things just happen, right? I have a lot of clients that move from California back home, right? So when they sell their property out there, they have buku cash, right? Because their housing prices are insane, right? So why would I make them put $400,000 down when they don't have to, right? We can discuss, hey, if you want a lower rate, because interest rates are rising, we hear it every single day, doom and gloom, right? Why not put 35 grand down, buy your rate down instead of putting $100,000 down?
But yeah, and so Misha has a program for for no down payment assistance and a lower upfront rate for the client, which is below market rates right now. So that's one of the things that a lot of agents don't realize is even some lenders don't even know about this program. Misha has a down payment option, but they also have a low interest rate option if the client doesn't need down payment assistance. So that's something that I'm going to tell you right now, like our office is starting to see a lot more of those because it's below 5% still, unless they just changed them again on Friday. So I might be wrong there.
And FHA rates, at least on Friday. I haven't seen them today. I did look at rates on Friday while in Vegas, so.
Looking at rates in Vegas. What are you doing with those rates, huh? We'll have to edit that. Got a little sportsbook action going on.
Yeah.
Here we go.
I did win at the sportsbook while I was there. Okay, FHA rates are better than conventional.
Yeah,
So
I mean,
it's
conventional the no down payment option for Misha is at 4.75 right now. You can't even get any loan right now at 4.75 unless you're buying points down. So right now, especially for those you know, if you've got a 640 credit score and you're getting a 4.75%, like that's insane right now with no points.
Even a 800 FICO score, 100 grand in the bank, they're not getting
No.
Correct.
So
I'm going to shift gears on this. I love this because here I got a little lender talk going on here, okay? But as a real estate side, we don't FICO score,
yeah,
cash. You know, I'm just being real. Out in when they're presenting offers, when you're buyers, you guys all have buyers. You're presenting them in this market. How do you're trying to really convince the listing agent to be, hey, this is the one. This is the even though they show. I like what you said, Brad, too, about instead of spending their $300,000, $400,000 cash, this is a better loan for them, even though they have it. I guess how do agents?
And we can't say that, you know?
Right, I know.
Yeah.
It's confidentiality. So how do we? I think this is where the roadblock is. Part of it is how do we, make it so appealing to raise that offer in this market? I mean,
I think it starts with education.
trick?
I do
Honestly,
too.
I think it starts with education.
It all is education.
It's one of the biggest and I know Julie knows this from me. One of the biggest things that I see is a gap of education for brokers teaching their agents this stuff, because I hear so much. I just went through this training class with my broker and this is what I heard. I'm like, why did you hear that? Why? And so I think that's where it starts. And what I encourage brokers to do is have a lender in to talk about these. Don't teach loan products. You don't know them right now. You could have been a lender 20 years ago. You're not a lender today. And that is one of the things that, unless you're a lender right now, you should not be teaching loan products. Let us do that. Let us teach you the ins and outs. I would be more than happy, and I think every single one of us, to go to a brokerage and teach all of you about this stuff, because it's one of those things that all of us see a gap in education. Honestly, I think that's where we start.
Staying in your own sandbox.
Educating
I
every
agree.
listing agent. I mean, I know submitting a VA offer on the buyer side, it's the lack of confidence from their training, or lack thereof, when they're submitting it. So they're very hesitant. I get it, because we've all been in that world where we're very hesitant to do something because we don't know. Right? It's the fear of the unknown. So it's our job, or my job, to educate the buyer's agent to properly submit that offer with confidence, backed up by data and stats.
And I think, again, it goes back to us making that phone call when you're putting those offers in. If your lender's not doing that for you, especially on government loans, honestly, find a new lender, because we all should be trying to get those offers accepted. We're a team for our buyer. That's something that if I call you and I'm telling you, like, hey, this buyer is a good, strong buyer. I can't give you specifics, but, the pre-approval's been fully underwritten. We look good on paper. I could have gone conventional, but this makes more sense for the buyer because I should know that answer.
Interesting. Anybody else?
And then putting it on us as the lender.
Yeah.
I mean, if it doesn't close, unless it's something wonky, which wonky stuff does happen.
It does.
But if it is a credit issue why something doesn't cclose, that's on me.
Yes.
And
Right,
I'm
right.
okay with that.
Right. And I guess that's
I
the
take
biggest thing
ownership
with
of it.
Yes.
Yeah.
it's just the whole, let's say a first-time home buyer, or it's just a lot of times they're going to be one of these programs, or FHA or Misha or so. But I guess it's, if I'm the listing agent again on the other side and they have not been educated, it's a very difficult scenario.
Well, so I think
Or do
that's
we
another
ask
misconception,
before?
though.
Do we ask ahead of time? Do we say, hey, are you willing, or send them a video? Or I'm just trying to, how can you convince, the buyer agent, convince the listing agent, this is what tools or what can we share?
Well,
just
so I do think that's another
brainstorming
misconception, though, that FHA and Misha buyers are all first-time home buyers, because they're not.
Right.
I mean, even Misha in the city of Grand Rapids, city of Wyoming, city of Kentwood, Spencer Township, and Kent City, you don't have to be a first-time home buyer to purchase with Misha down payment assistance or without. So we're doing a lot of not first-time home buyers. FHA, I honestly can't tell you the last first-time home buyer I did with FHA. So that's one of the things that,
I can
again,
tell you
goes back
that
to
only
education.
33% of FHA loans, which is a lot, but are first-time home buyers.
33%.
33%.
I mean,
Lower than I would think.
yeah.
Yeah, that's good.
that was of 2020's portfolio.
That's right.
The misconceptions on the VA home loan are endless. All right, so it's not as easy as do this, and do this. All right, it's more ask the open question, why? Can I ask why? because then you start to get the root of the cause. Right? From there, that tells me the route that I have to go, the tactics that I have to take. Because I know that at the end of the day, and this is going to sound very arrogant, I don't mean it to sound arrogant, the whole goal is to get me on the phone with them. So I know I can overcome every objection that they have.
Yep, sure.
So that's the whole strategy that I have with every buyer's agent is, look, this is what we're going to do. We kind of role play or, talk it through. This is how you submit it, draw attention to this, this, and this. And if they still have questions, I'm more than willing to talk to them. Or do you want me to call them out, like right out of the gate?
Yeah, I think all of us have that same structure. Yep. So that's a good way to get offers accepted.
I think another question too is a listing agent, how can a listing agent better educate their sellers when they get offers? What would you suggest there? I mean, just how can we're sitting at their kitchen table and, hey, we fill out the listing agreement. Basically, we're checking the boxes, cash, conventional, FHA, VA, whatever, Misha, whatever.
I think it again comes to education and allowing listing agents to have confidence in it.
Knowing
their
the
buyers
products.
know. Yeah.
Because if you could I've had homes that are conventional only and they won't accept a government loan, and then I went to the listing agent and I asked him why.
Right.
Because I had a client that wanted to put an offer in on it, and he's like, just because we don't want to deal with repairs. I'm like, your house is listed at $400,000. I don't think we're going to have any repairs. What are you talking about? And so we were actually like, their best offer at that point was $420 on a $400,000 listing. My client went in at $450 and won it because of that conversation. So again, I'm not afraid to give pushback, and I don't think any of us. We were just talking how we're all vocal and not afraid to negotiate. But it is the big thing. Like, we want to help you because you selling homes putting homes on the market as a listing agent is going to help our buyers agents sell homes, which is going to help us write loans. Without you as a listing agent, we can't do that. So it starts with education. It starts with that conversation, and don't be afraid to ask questions. If I ask you why, it's not an insult to you. It's me clearly just asking to understand, because I don't, from a lender perspective, understand why we're limiting the offers that you could get for your sellers if your responsibility.
That's a good question. I'm going to bring that up. As a listing agent side, what should I be asking you, and what can you disclose or not disclose, just to help us better educate ourselves? Because if I'm going to meet with my seller tonight at 6, I have 4 offers, 4 different type of offers. If I call you guys, what are you going to say?
If you trust the lender, we really can't give any details on the deal. But if you trust the lender, has it been fully underwritten? Yes. Has.
Okay.
That's
a good question.
You can ask us if we verified income, assets, credit. You can ask those 3. I can't tell you specifics about it, but I can tell you that I did it.
Okay.
And so that's one of the things, like the big online companies or a lot of the big banks even, they don't do fully underwritten pre-approvals.
That's the sad reality.
There's a big difference right there. That's a huge
that's a whole nother topic.
Back to just that, I know the 3 of us want this industry and our agents to have trust in us. So I'm not issuing a pre-approval without seeing that.
I mean,
That's my name.
Yeah.
The 1-800 lenders. Do you know how much money it takes to jump to the top of Google? Do you know how much money it costs to have commercials out there during big games? Where do you think this money comes from? It's not them overpaying or even paying a fair rate to their loan officers, right? It's these loan officers, if you look them up, they were pizza delivery drivers 3 months ago, 8 months ago. They're
working in a call center taking volume.
Yeah, and they don't have any personal gain in your transaction. Yeah. They're on to the next call, They're hourly employees. They get paid nothing, right? So they don't care if your loan closes or not.
Most of us don't get paid unless your loan closes. So
correct. This is my business, just like it's yours.
We want this to close just as much as you guys do. Trust us. We've done a lot of work, for the last. I have a credit build that I've been working on for 3 years now. And that client is still working on their credit. But that's 3 years of my time that I've taken to help that. I don't want that to fall through.
That's good. I think there is a misconception on all these pre-approval letters too. Like you just said, if you already verified all the income and assets, we get a piece of paper. Every offer has one.
Yeah.
We don't know what it says. Agents really don't know what it means. But that's, I think, to really help bring up the government-backed loans. This is a big thing. I didn't, it's for me just learning here, just knowing raising the bar on those loans could be better than a piece of paper that you don't know,
Yeah.
I don't know. I guess that's where I'm going back to real quick. What else can we ask? What else? Is there anything else we can ask?
For VA, I would ask if they have their COE, certificate of eligibility.
That should be part of your pre-approval
Yes.
process.
I mean,
But
the difference between pre-approval, pre-qualification is you verified everything.
Right.
Yeah.
Yep.
Well, if you
You're
don't have the
pre-approved.
COE, how are they pre-approved? Right.
Yep.
The last thing, like a lot of lenders do, is they wait till a contract comes in before they try to generate this.
Yeah.
Right. Here in Michigan, there's no active duty bases, but we are surrounded by reservists and National Guards members. So with that, we have to prove time and service and discharge. Right. So tell a Marine, hey man, I need your NGB 22. He's gonna be like, what?
Yeah.
Because it's not. That's a National Guard form, right? Okay. So if you get this stuff out of the way up front, do more work up front, the less likely it's going to fall out of the packet.
I actually get that before I even run credit.
Correct.
Yeah.
Like
I do it on the very first
Yep.
call.
Yep.
I get all of my documentation up front to see if it's worth my time to run credit right now. Because if the buyer doesn't show investment into the process, I'm not going to waste my time until they're ready to move. And I think that's a good practice for all of us. And I'll tell an agent, like, I don't have a pre-approval for you yet because your buyer's not invested.
Yep.
Your buyer's not ready to go. If your buyer can't give me the documents now, I'm going to tell you right now,
Not
once we
getting
get
it,
under
yeah.
contract, there's a reason that loan closes in 45 days, and it's not my fault.
Correct.
So I think this is just an interesting, when you look at the big picture, I think about conventional and all the three types we just talked about, but a lot of agents are on that whole conventional side. They go, I got to do that. No, you don't have to. You just shared some great tips on what we can do as listing agents, help educate. I just think as there's more education coming out, this is great to start, I feel. I'm learning here. And then I think we all can learn together. But what else? Is there anything else you can think of, just a tip as we go forward from here, and we'll wrap it up?
Yeah. Who you work with is everything. All right. Whose name is on the pre-approval letter? I mean, if they've built a good reputation in the market, it's going to go far better than 1-800 lender.
I think it goes back to education. I always go back to that. And so the biggest thing I can say is if you don't know, ask. And from a broker side, if there's brokers that are actually listening to this, I hope they are, fingers crossed, Julie hopes they are. But if there's brokers listening to this, ask one of us to come out and do an education piece for you on this stuff. All of us want to get offers accepted just like you do. Ask us to, because I will take 2 hours out of my day to come and do a lunch and learn with you. That's all day.
Spend the entire afternoon there
All
answering
day.
any questions.
All day.
Same.
Plus, I offer state certified CE credits as well with my classes.
Yeah. I think we all have classes like that too. So
How about Julie? Anything for Julie? Anything? Last advice?
I'll do classes too. I mean, we're
They're all
all of
offering
us.
food. I mean,
But the thing is, I don't think any of us really, we're going to get leads out of it, hopefully. But the other part of it is just education. Like, if I don't get a lead out of it, I might have a conversation with you, Steve, and you know me now that, okay, you know that you're getting a pre-approval from Brad or Adam or Julie, and it's good to go. Like, I don't need a lead out of that. I just want to educate you because that's going to help my clients.
buyers just got a
exactly.
house.
My
Yeah.
clients, the agents that I work with.
And the fallout down the road, or not fallout,
Yep.
but the benefit down the road is you do not have to deal with this again in theory.
Yeah.
might be interesting just these as we share loan, these closings. I'm like, hey, they just closed a Misha loan. Hey, they just closed a VA loan. And just like this, it's just kind of like another add-in for, I think, of social media posts, whatever. Just getting it out there.
It is. I do think that we see a lot of it. Most agents are friends with 500 other agents on Facebook, and then 20 other lenders, and so it gets redundant, and you see a lot of it, and you just scroll aimlessly because that's what social media is. But I think calling it out at the top is something that I've started doing, and I do think that helps.
That's good. All right, so this ends our 3-on-3. Thank you guys. Applause for you guys. Good job. All right, so give these guys a call for the loans. All right, so
Julie,
thanks everybody.
high five.